Joyce, I'm going to start with you. You're here in studio. Warren Buffett having a bit of a chuckle, but it's certainly no laughing matter when it comes to tariffs and the markets. It seems like a lot of the volatility we've seen in February is due to these tariff uncertainty. First, I want to start off with, you're the head of global research for JP Morgan. Why did the markets end higher on Friday? I know it wasn't a tariff discussion, but a big blow up in the Oval Office, seeming just to add to the geopolitical tension. What was the reason?
I think there's still expectations that the tariffs won't fully come into effect. Could you have delays in Mexico and Canada? I mean, honestly, I think that the real tariffs to watch are whether they go ahead with steel and aluminum on March 12th. So I think the market is not yet thinking that the tariffs will necessarily come into effect. And I think of Russia, Ukraine, there's a sense that, this is something that isn't going to happen overnight. It's going to be an ongoing discussion, but it doesn't change the fact that the U.S. still, the growth differential, the earning differentials, that it sort of has the upper hand here. So I think the market hasn't priced in the tariffs yet. They're thinking that Russia, Ukraine is something that's going to take more time to play out. But a critical minerals agreement still is something that could be in the offing. And you're seeing that the tone has changed from Zelensky after that meeting as well.
That's the understatement of the year, Joyce. The tone has changed? Wow. Jimmy P., coming over to you. The tone has certainly changed. I want to kind of ask you the same question. Seeing these kind of, I guess, explosive situations in the Oval Office, I'm not saying who's right or who's wrong, but it was certainly an explosion, what we saw on camera between Zelensky, Trump, and Vice President Vance. Why do you think investors seem to shrug it off towards the end of the day?
Markets will fluctuate. I think there's a lot of hope that, eventually agreements will be signed. The war will de-escalate. You saw the same kind of hope coming into this year about tariffs, that the president would actually push forward, very, targeted, narrow tariffs, that various countries could do things so the tariffs didn't take place. But what all that creates together, and of course the market, Wall Street was wrong on that, it is this tremendous sense of uncertainty, which just isn't a buzzword. It's a real thing. It freezes business. It delays hiring, delays capital investment. Also over the weekend, I know Mark Zandi from Moody's, he said the economy was gagging on uncertainty. The Wall Street Journal editorial page saying how dangerous uncertainty was to the president's agenda. So all this uncertainty is happening. It's a real thing. And the third problem is, this is the core of the president's economic agenda, is trade, and that's the thing causing uncertainty, and really, I think, is a suppressant on the economy.
All right, so Joyce, coming back over to you, let's start off with what we know. We know, according to your research, the effective tariff rate for the U.S. last year was about 2.3%. With all these tariffs, where do you see it moving to, and how do you see it impacting investor confidence and also business confidence? We just heard from the CEO of the nation's largest utility. He says they've done the research, it's going to raise costs by a bit, but at the same time, they raise their CapEx spending. Do you expect to continue to see that trend when it comes to other companies, when it comes to spending, hiring, and how do investors react to all this?
Look, tariffs are an adverse supply shock. It's bad for growth and it's bad for inflation. So if we just take the tariffs that are under discussion now, 25% on Mexico and Canada, another 10% for China, that we think takes about 0.7% off of GDP growth, just the arithmetic of it, and adds about 1% to inflation. So you're looking at an effective tariff rate that could go to 8 to 9%. But remember, we're also talking about steel and aluminum tariffs. And on those tariffs, no exemptions have been announced. They're universal. And I think that's what the market is looking for. The tariffs have been threatened for foreign policy purposes initially, but now you're moving into specific products, steel, aluminum, copper, lumber as well, and using more of the traditional mechanisms as well. So that will tell whether it really is serious or not. Right now, everybody is just waiting on it with the policy uncertainty rising.
All right, speaking of policy uncertainty, right now, we're showing the tariff timeline right now, Jimmy P. So obviously tomorrow we could see those Mexican, Canadian, and Chinese tariffs. And then March 12th, you have another date for the steel and aluminum. But April 1st, that's kind of interesting right there. That's the deadline for the federal review. In between now and then, what are you expecting? What should investors be paying attention to try to get some insight into how the president's thinking? Howard Lutnick's going out of his way to continue to say the president's going to have the final decision.
Yeah, Howard Lutnick, he's not just saying the president will have the final decision, but he's giving the sense that they don't know exactly what that decision is. What should investors pay attention to? I don't know. The president's Truth Social media, that seems to be pretty important. This is really sort of a moment by moment thing. And again, which feeds into the uncertainty. Joyce and I have just been mentioning like this, the tariffs as a huge headwind, but the supposed tailwind, tax cuts and deregulation, like that's still like a tomorrow thing. The tariffs are not just a today thing; they're sort of a hour by hour thing, and that's the problem.
So you're saying that's the problem. So between now and April the 1st, do you expect more volatility because we just don't know? And as you said, Howard Lutnick says he doesn't even really know. Or do you expect the president to use this uncertainty? As we've often said, sometimes he's negotiating, sometimes he's trolling. Do you expect him to use that to manipulate either investor sentiment, economic sentiment, global sentiment? I don't know what sentiment he's going for.
All the above. Listen, what we're describing is sort of as a problem. The president clearly doesn't think it's a problem. He thinks that sort of that uncertainty, if you want to be stronger, you could say chaos is a negotiating tool. It's a leverage. It makes him unpredictable, and he thinks he can get what he wants, whether it's, and we're not sure exactly what he wants, as Joyce nicely said. Are we talking about sort of foreign policy goals, particular goals? Are we talking about reducing trade surpluses, particular products? So the president views this as a strategy, and he views tariffs as the core of his economic policy. And those two things together mean we're going to be stuck in uncertainty city for a while.
All right, at least probably until April 1st. Joyce, I'm going to come back over to you. I have not seen your email inbox, but I can only imagine what's in there. A lot of people saying, well, what now? Where do you put money to work at now if you want to put money to work? What sectors are you feeling less confident about? And maybe you would tell investors to take some profit in if they have some profit, or maybe just outflows, period.
Well, consumer discretionary, I think, is the most vulnerable here. And then those areas that are tied to China e-commerce as well, because April 1st, the focus is going to come back to U.S.-China. We're talking about Mexico and Canada this week, but April 1st is when you have a whole host of things, the 301, the 232, whether you look at permanent normal trade relations coming on the table. So I think that you've had this big China equity market rally that could really be careful here. Be careful here. That could be at risk. But consumer discretionary, I think those that really don't have the pricing power are going to be most affected here. Now, Japan is one, actually just kind of coming away from the U.S. that still stands out to us as having its own domestic story. You've got some pockets of emerging markets like Argentina as well that still have its own domestic story, which is not as subject to a lot of these global tensions. So, we're sort of neutral here right now on U.S. equities. You're not underweight because you've still got a very wide earnings and growth differential here.